But if you're running a technology company today, which is a very fast-changing environment, are you inherently protected by your business model or by having offices around the world to spread risk? Well, let's look at the last crisis to check just how deep a crisis can cut and how quickly it can happen. The last crisis in 2008 took at least 12 months to build up, with the demise of Northern Rock happening a full year before Lehman and the entire banking system collapsed. The signs were there. UK and European technology company output, in terms of the PMI index, started declining 2 years before the Lehman collapse, and then output tanked. And the valuation multiples of software as a service or SaaS companies were relatively flat in the year leading up to the Lehman collapse, but then they dropped by half in just 5 months. SDL, as a SaaS company case study, was growing nicely in the year leading up to the Lehman collapse, and then fell 40% in just 3 months. And its revenue growth rate fell from 35% to just 8%. And it wasn't just in software. Online gambling, an industry in which some CEOs believe they're inherently protected against a crisis by their business model, also suffered. 888, for example, was steadily rising leading up to the Lehman collapse, and then its shares fell by 55% in just 3 months. And its revenue growth rate went from a positive 20% to a negative 4%. In the internet sector, the leading real estate portal in UK, Rightmove, was steadily rising leading up to the Lehman collapse, and then fell by 45% in less than 3 months. Its revenue growth rate went from a positive 31% to a negative 13%. UK IT company Computer Center remained relatively flat leading up to the Lehman collapse, and then fell by 44% in just over 2 months. Its revenue growth rate dropped from 8% to negative 2%. Stable UK software company Sage was relatively flat leading up to the Lehman collapse, but then lost 20% of its value in just 1 month. The broadcaster ITV was rising nicely leading up to the collapse, and then its shares fell by 45% in just over 1 month. The rate of its decline in revenue went from a negative 2.5% to a negative 7%. The market research and marketing company Cello Group lost 58% of its value in less than 5 months, and its revenue growth rate dropped from 27% to a negative 8%.